Hello, this is Paydirt TV. I'm Dominic Piper. Today I'm joined by Nick Maric, Chief Executive Officer of Heavy Minerals Limited. Nick, thanks for joining us.
Thank you for having me.
Nick, the company's just listed on the ASX in the last couple of weeks, backed by a $5 million IPO. The focus really is on this Port Gregory garnet project here in Western Australia. Now, garnet isn't a commodity that we hear a lot about amongst juniors. What's the opportunity that you've seen here?
Yeah, well, it's a pretty niche market, to be honest. There are a few big players, and ironically enough, the biggest player in the world is based out of Port Gregory. So you've got GMA Garnet, which has got their Port Gregory mine there, and they produce about 30% of the world's garnet. And so we've got some ground that they were forced to surrender in 2018, and we've used their data from online, and we've used it to create a exploration target of between 3.5 to 4.5 million tonnes of garnet, which is about 3 to 4 years worth of worldwide demand at the moment. So we've got a really interesting project up there.
And what's the demand and the outlook for the industry and the sector looking like? Is it like most other commodities at the minute where there's a little bit of turbulence?
Yeah, so the market itself is based around a GDP, so it got hit pretty hard with COVID, but we've seen a strong rebound since then. If you look at the worldwide end use, it's about 1 million tonnes per annum, and TZMI, who's a big data aggregator, is forecasting a supply deficit as of 2022, expanding further as of 2024. So you're looking at around a 240,000 tonne per annum deficit at 2024 and a 540,000 tonne deficit as of 2030. So that's obviously without any new mines coming on. And the other interesting part is that alluvial almandine garnet, which is the style of mineralisation up at Port Gregory, is the premium garnet on the market, and will actually even be able to displace some of the supply coming out of China, which is an inferior style of garnet.
So you mentioned that you've built an exploration target off the back of historical data. Mm-hmm. What's the plan from here? Is it a matter of like conventional exploration, of drilling out your target?
Indeed, yeah. So we've got a drilling program starting next week, and that will consist of about 3 months worth of drilling, 12,000 metres of drilling, so 300 odd holes, and we're hoping to get to an indicated resource.
Can you explain a little bit for viewers who are, again, a bit like me, who don't know garnet projects all that well? Mm-hmm. Is there another commodity that the style of mining and style of mineralisation is comparable to?
It's pretty much a traditional mineral sand style mine. So you dig the sand up. The style of mineralisation is it's a dual deposit. It lends itself to a free digging or dozer trap style operation. You take the sand out, you put it through spirals. You take out the fraction that you need, which is anywhere from 4 to 10% depending on the grade, and then you put back the sand, and then you put the topsoil back over the top. So from an environmental perspective, it doesn't damage the environment. You're not leaving a gaping big hole in the ground, and it's a very simple, low capex, low opex style operation.
Once you've got the resource locked away, when will you be able to get an idea of those capex and opex numbers? Will you look to do a scoping study in the next year?
Yes, so we're planning, ideally we're looking at getting the JORC resource out early in the year, 2022, and then we should be in a position then to start a scoping study off the back of the metallurgy work from that.
That's great. And your secondary project, and I assume it is a bit of a secondary project really at the moment, is in Mozambique. You've got mineral sands ground there. Mm-hmm. Obviously there's been a lot of mineral sands activity at the moment. What's the plan there? Will you hit that just as hard?
When we can get in there, yes. At the moment we're waiting on some approvals for our mining licence and the like to be able to get underway there. COVID's a bit of an issue there at the moment, so we've decided to focus on the garnet for now. It's a really exciting project still. We wouldn't have in our portfolio otherwise. We're adjacent to the Jangamo project, which is a Rio Tinto Savannah project. That's got a resource of 4.4 billion tonnes at I think 3.9%. So it's an absolute monster, and we literally abut it. So we've got some great ground, just focusing on the garnet until we get our approvals through.
So what can we expect in the next 6 months? A resource out, a scoping study. Where should investors be looking for value from Heavy Minerals?
Well, we've got a lot of news flow coming. So as I said, we should be able to have some visual results from the garnet drilling, from the panning results. Late October, early November, we should be able to get some assay results back to the market. As I said, all things hanging together, a JORC early in first quarter next year. So there's absolutely tons of news coming out. We're hitting the ground at the right time. We're in the right place. We're in the Pilbara of the garnet world. There's the Lucky Bay mine's just been approved just north of GMA. So we're really in the epicentre of garnet land there. And as I said, there's lots of news coming with EVs sub 5. It's a great little story. I think either of our projects justify that EV on their own. So I think there's plenty of value, and we're hitting at the markets at a time when commodity prices, especially our suite that we're chasing, are all on the way up.
They certainly are on the way up, both garnet and mineral sands. Nick, thanks for joining us today. Best of luck, and we'll keep an eye out for how that share price goes the next couple of months, particularly off the back of that resource drilling. Thank you.
No, thank you very much for having me.